right, so we have a really good episode for you guys today. Today, the market, it's funny, we look at the market today, and the market really didn't do a whole lot. I mean, it was fluctuating right around break even, a little bit above, a little bit below. But we have the Dow down a little, the NASDAQ down a little, and the S&P down a little for the most part. And yet we had an amazing day today. At the high, we got it up to, man, $7,000 we made, which would be about 6%. And mainly just because we don't hold NASDAQ or Dow stocks pretty much. So we have one S&P stock in the portfolio as far as I know, and I think that is Tesla. And maybe Carnival is one of them. I don't know, whatever. But we ended up having a really good day today. It started off around 110,000, and it just lightninged up pretty much the whole day. Probably had some profit taking a little bit in the afternoon, which is fine. That's what people do. I do that sometimes, not a whole lot. We're going to take profit taking when we get the big money. So, all right, so let's take a look a little bit at some of the things I noticed today. So overall, in fact, we're going to take a look at a couple things. Number one, the buy ratings. So we're going to take a look at our chart. We're not going to stay on our chart. We'll come back to it in a little bit, but it's interesting. I was noticing today we looked at our overall percent gain and our buy ratings. So I didn't really list buy ratings up here. I probably could. But we look at some of the top performing stocks up here, right? When we look at, and our top performing stock is Signet Jewelers. That's this one right here. And this one is up. Basically, we've made 6.5 times what we invested in it. And there's no ratings in it all. Think about that. Of all the things they could do, they could have analysts that take a look at this stock. And these are reviewed every month, so they could change whenever they want. Yet nobody decided they're going to put an analyst rating on Signet. And yet it is absolutely exploded. Let's take a look at some of the other big ones we have. Let's see. We have PVAC. Again, it's up 2.5 times, which seems like nothing comparatively. No buy rating. One we have that has a good buy rating, Every, which I think it's a no-brainer. 100% buy rating, went up 203. Took a look at Caesars Entertainment. That might be a. I don't think that's a Dow stock. I don't think even it's an S&P stock, but 83% doing really well. And then this is one I always love, Crestwood Equity, which is an oil stock, 33% buy rating, and I've more than quadrupled the money on it. So just really interesting when you look at that, and yet you look at other ones that have like an 89% buy rating. That's FANG, which is Diamondback Energy. It's done really well, 150%, which is awesome. I'm sure they're really thrilled with that, but it's not pulling the type of returns that we're pulling here. Beyond that, let's take a look. We took a look at Vine Therapeutics, has 100% buy rating. It's only returned 17%. So I think when it goes into it, it's easy for us, and I've even done it a little bit, where we go and look at the analyst ratings, and sometimes they're right, sometimes they're wrong. But in the age of a pandemic, where people's trading and how the stock prices behave is not based on strict like fundamentals and support levels and resistance levels and all that kind of stuff, or even revenues. It's looked at, you want to look at it from your cost basis, which is kind of what we always do. It's what did you buy it from and where do you go from here? And that should be your buy rating. So a lot of times I just notice that you can't always look at that and just say, oh, this one has a 93% buy rating. I'm going to go buy it, because it doesn't necessarily work that way, right? It just doesn't work that way. So with that being said, we're going to talk a little bit about the news today. So I think one of the reasons why this went up today is Biden introduced a stimulus, or talked about the stimulus he's going to have. I think they said that they were looking for $2,000 checks. I don't know if that just means a correction of 1,400 from the 600 they did before, or if it means a brand new 2,000. I don't know if it means recurring checks. I really don't know what that means, but the market loved it. He's a Wall Street guy. I've been telling you guys that for a while. And so when he says we're going to be printing money out of nowhere, Wall Street goes, me, and they stand in line. And normally, it's like whatever opinion you have on it, you have on it. But if you're in the stock market, you have to love it, because what it means, it's going to drive up the prices of equities, meaning stocks. And realistically, what it means is you're going to drive up inflation. Now, with that being said, we want to talk about something that we don't talk about a whole lot on here, but we're going to talk about today, and that is Bitcoin. So we're going to open that up a little bit. Now, the reason this is important is if you're following things from if you're following Bitcoin and just saying, and you're trying to answer the age-old question, will Bitcoin keep going up? So we look at it from a year standpoint, right? Flat, 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 spiked up, had a little bit of retreat, came back a little bit. 5 years ago, had a spike, went down, came back, and just launched through the stratosphere. Will it keep going up or will it go down? It's an age-old question. Tomato, tomato. You're going to have people on both sides of the argument. And I get it. It makes sense. Now, but if we're going to look at it from an economic standpoint, just strictly economics, like take an Econ 101 course, and we can even, just for those who have never taken economics, we're just going to do simple division, okay? If you take something that has a finite number of supply, and in this case, it's Bitcoin. There's only the ability to have 21 million Bitcoin in existence. You cannot make more. It's built into the algorithm, the software, whatever it is. There's only 21 million. So, the closer it is to, hitting 21 million, it's a parabolic curve. The harder it is to actually mine Bitcoin. So early on, it's easy to mine because there's not a whole lot out there, but it takes more effort and energy each time to do that. So it's literally literally the definition of exponentiatingly more difficult. So, but there's $21 million or 21 million Bitcoin. So with that being said, that's going to be our denominator. So you have 21 million on the bottom. And then basically the price of Bitcoin is, let's say it's $38,000 dollars per Bitcoin. So you take the total amount of money out there investing in Bitcoin divided by the number of Bitcoin, and that comes out with your price. Now the thing is, when you start throwing money in the market, and especially when you start printing money and the value of the dollar goes down, what that means is it takes more dollars to buy anything. So whether it's potatoes, I like the potato thing because it's just easy to understand. It's like how many, if it costs $1 per potato, and then you put start printing money, and there's twice as many dollars in the market with the same amount of potatoes, it means it's going to cost $2 per potato. And then when there's 10 times the amount of dollars in circulation, it's going to cost $10 per potato. And that's the idea of inflation. So when you see Biden just putting mind-numbingly high stimulus / relief / spending. It's not really all stimulus. They'll call it stimulus, but the infrastructure stuff he's going to talk about is not stimulus. It's spending. Bailing out the states is not stimulus. It's spending. Giving $2,000 checks to people is not stimulus, and it's not spending necessarily, but it's relief checks in a sense. So when it comes to Bitcoin, you have a fixed denominator at 21 million, and then as you start throwing money in the market, there's more money out there on Wall Street in people's pockets, which means there's more money to spend. The more money to spend means more competition for a resource. The more competition for a resource means the price of the resource goes up. Okay, so it's really simple. If you have 10 people in a group and they all want the potato, and 10 people in a group and there's one potato, if only one person wants the potato, the price of the potato is whatever the person wants it to be. It could be a nickel, it could be a penny, it could be $1. When you add 2 people into the market and they want to buy the potato, they start bidding on it, and there's going to be some price competition, but they both have ceilings on what they're willing to bid. So, it'll go up, but not like skyrocketingly, because that means there's 8 people that don't want the potato, which means there can't be that much demand. But then you get up to the point when all 10 want the potato, it means there's universal recognition of the demand on the product, and there's 10 people bidding. The price of the potato is going to go through the roof. So the more money you have thrown at something, the more it's going to be there. So we've talked about the fact that Bitcoin has been subject, especially the last couple of years, to people who have institutional investing funds that are buying Bitcoin. These are the people with ridiculous amounts of money. And so the more people of those that are buying it, the more the value of that stock is going to go through the roof. And so the same thing is with Bitcoin. So why do I talk about all this? I know I've given you some heavy stuff. Well, what it means is you have to ask the question, is Bitcoin going to crash back down, or is it going to keep going up? Now, under normal circumstances, if you take all the variables out, then it's tough to say. I mean, they're, offhand without any evidence. But when you start to look at the fact that money's being thrown hand over foot in this economy, there's more money out there, there's more people to spend money, and there's more people, there's more demand for something that institutional investors are doing. It means, number one, this price is not going anywhere else but up. So with that being said, I'm not saying I would buy it at 38,000, okay? Wait for a dip. But what I am saying is I'm going to take a look at some other things. And so that's why I'm in Bitcoin Cash, because Bitcoin Cash follows Bitcoin, but we haven't seen with Bitcoin Cash, we haven't seen the surge that we have with Bitcoin. So we take a look at it from a year to year. Let's take 5 years. 5 years is a good one to look at. So Bitcoin went up here and then it spiked way up. And this one spiked up, but we haven't seen that spike up here. So this one I think has a lot more upward mobility than Bitcoin does, but they're both going to go up. It's just a simple math equation. So if you're debating whether to get Bitcoin or not, you need to get it. The question is, what price point do you want to spend for it? That's up to you. It's a personal decision. But for those people that are saying, it's going to hit $100,000 per Bitcoin, I don't doubt it for an instant. So it's just a mass. It's like in that Titanic when they had five sections of the ship were breached, 5 compartments were breached, and he said it's a mathematical certainty that the ship's going down. Well, in this case, it's a mathematical certainty that Bitcoin is going up, and it's based on the fact that there's a limited number of Bitcoin. Now, if Bitcoin were something that you could actually, to say, okay, 21 million Bitcoin, how about this? We're just going to make 30 million Bitcoin because we think there's demand. You would see the price per Bitcoin crater because there's not that backstop forcing that price up. So just something to think about going forward. One of the things we also want to talk about is, and it's not often, especially on this podcast, that I praise politicians, but I'm going to do that. And it makes me grit my teeth. I hate doing it, but I have to do it. And I'm not sure what led to it, but last week, Andrew Cuomo, and I think we talked about it on our last video, basically said that he was going to green light allowing people 65 or under, or 65 or older to get the vaccine, and they don't have to wait until, like, what is it? It was like 1A, 1B, B1, or 1B, or no, A1, A2, B1, B2, and B3, and like the old people were in B3, and they were behind like prisoners and psychiatric patients and things like that. Well, for whatever reason, he did an about face. I haven't heard anybody explain what the rationale is, cynical or otherwise. And they said, okay, we're going to start opening it up. So I don't know, whatever the reason is. Well, California and New York have a history of competing against each other. And so our Führer, our most excellent governor, Gavin Newsom, decided to do the same thing. And he said, okay, we're going to move anybody who's from 65 or older, who is in like the B3 category, they're going to go right to the front of the line, which I talked about in a prior video. I'm like, these people are dying. People are tracking deaths. Public policy is based on deaths. And the people that are dying the fastest or most risk of dying are sitting here in section B3, which is just really, really, really stupid. You could be a physical therapist and you'll get the vaccine before somebody who's 90, which is just moronic, it's just really, really stupid. So anyway, that I think plays into it too, is that people look at that and they're like, all right, well, these people are going to get vaccinated sooner. And I was actually reading an article where they're like, before you have all this vaccine that like they were running out of people to give it to because they'd have a certain number of vaccine doses in an area. Let's say you have 100 vaccine doses and only 60 people came in for vaccines. Well, now you have 40 vaccines left and they're going to spoil. Well, now the big problem is, and it's not a bad problem to have, is that you have 100 people who want the vaccine and you're going to give all 100 away. And so what are you going to do for the second dose, or how are you going to manage people who want the vaccine but can't get it? Well, I think that's great from a supply side standpoint, and these companies can figure that out. But to sit here and let something that they made spoil is moronic. So anyway, that's a really good sign for things moving up, especially our cruise line stocks when it comes to that. Secondly, Johnson & Johnson just announced today that their vaccine went through their internal trials, was deemed safe, and that they basically put out a statement to their investors stating that they were still on pace and expecting to meet their distribution schedule of it being released in March, which, believe it or not, is only a month and a half, 2 months away. So that's really good. That'll be a third vaccine that, it still has to go through, regulatory approval, things like that. And there's a number of other vaccine companies that are slated to have that done. So great sign. And it's one of those things where it just shows where this thing's going to be over faster than most people, especially the skeptical people. And I tend to be skeptical, most people think. So if you haven't got your stocks in, make sure you get them because the big money is still yet to be made. All right, so a couple things I saw today when I went into the Apple stocks thing. They had one thing, I'm not sure if it's even still here. Good, I'm glad I put this in here because it's not there anymore. So one of the guys said, panic-like selling, not buying surfaces in NASDAQ composite trade Thursday morning. And so I read that. I didn't even look at the market yet. And I read that and I'm like, really? I mean, are the tech stocks cratering? I mean, panic-like selling is not a moderated word. I mean, that's like a very severe emotional word, right? So then I look at literally the next article and it says, at midday, Dow, NASDAQ hit record highs as focus turned to Biden's stimulus plan. So these people need to get together and talk. And realistically, and yes, it was a record high. Technically it was. But I mean, the market's dead even. Look, you see it right there. It's down 1.012%. And it's like, this was the panic selling. Are you kidding me? You might want to wait. You might want to put pause on that release and wait till the end of the day to put that out, because these two people don't really. I mean, this person has a little credibility, but this guy who wrote this, Mark DeCamber, has no credibility whatsoever. And if he wrote that headline or his editor wrote that headline, I'm not sure, but one of those needs to basically quit their job, or at least put on pause for a while, because, or a big oops, my bad on their next article. Anyway, all right, so let's talk about COVID for a little bit. I just went in today. Last week we talked about the fact that we were thinking that we might be over the hump when it comes to COVID, and things are going to kind of turn back to normal. Normal and have like lower numbers. So we start to see the new cases, start to drop down just like we thought they would. We start to see the curve bend down. Cumulative cases don't tell us anything, but look at the deaths by day. I mean, that is an absolute clear trend that we see here. It spiked up right around, I don't know what day it was at. That was, does it even tell us the day? December 30th, roughly, give or take. And it cratered back down. Yeah, we see the testings all over the map, low, high, low, high, low, high. Average trend lines right about right there. And the testing positivity is pretty high, which, obviously worries people a lot. So we look at hospitals. Again, the same thing. Hospitalizations are going up a little bit, but COVIDs are way higher. That means people are avoiding hospitals, which that's kind of the hidden effect that we don't see there. Hospitalizations by week, we can start to see this trend go down. Of course, I still think we need a week or two just to confirm this trend is working that way. But we notice that this is starting to turn, like the deaths started to turn, like the cases started to turn. And then, we look again, we talked about the green light in the vaccine for all the old people. I think my in-laws are getting it like this week or next week. But again, everybody has underlying conditions. Pretty much everybody is old. We had one exception. I think it was on the next page. Yeah. Yes. Everybody's a yes. We had one exception, a 32-year-old. No offense, but this guy, I don't know what the deal is. This guy just, God struck him down on a mountain. I don't know what it was. You rolled the wrong, you bet on 12, and on playing craps and the 12 hit. So, but pretty much everything here is 80s, 70s, 90s for the most part. And again, yes. Everybody has underlying health conditions. And so when they have that vaccine rollout, and the people who are in these age groups and the people who have underlying health conditions are getting fast-tracked for the virus, I think it's going to work, and you're going to start to see, where is this? We're going to take a look at here. Is it this one? No, it's the next one. Yeah, you're going to start to see this number, the deaths by day, starting to flatten out and start to look more like this. So we've hit and gone through our second wave, and maybe it's a different strain. I tend to think it was a different strain. But I don't know. What do I know? Who knows? I'm not the expert. I'm not a doctor. I'm not an epidemiologist. But let's take a look at our portfolio. So overall, we're doing really good. We've now officially doubled our purchase price from our purchase price of all these stocks. We are at 254% gain, which means we've tripled and a half our overall gain from our initial investment of $33,000. We're on pace to quadruple it pretty shortly. Everything is in the black except for AMC, and it's mainly because they watered down their shares. They'll be back. Once we start to see this start to flatten out again, then people will feel more bullish about AMC. So that will come back. I'm not too worried about that. Next ID it's a tech company, so that'll be fine. They do cybersecurity for the Internet of Things. They're not going anywhere. I'm going to leave that alone. In fact, I might buy a little bit more. And I was looking at the numbers today, and I was like, well, I could buy, let's say I bought it at 141. I would lower my cost basis to 151, roughly 151 and a half. And realistically, if it went up to $3, I would only gain $200. So it's not really worth, the juice isn't worth the squeeze on this one. We're just going to let this one ride. And then Texas Hospitality, again, this one is just, it's an outlier. This one always does really well. For whatever reason, it's a little bit lower than what people want or people are expecting. But again, the price difference isn't all that much. So I'm going to let that one ride as well. So overall, we made about $7,000 today, $6,000, something like that. I decided to edit my Hall of Fame resorts stock. It's sitting at 188, and we look at that as far as an upside, and that one's sitting at 571. I had it at 160 as a buy, but I'm like, don't get greedy. This is a nice multiple if we can get it. So I decided to edit it out, move it up to 175, and I might adjust it again, but I figure one bad day or two bad days might get us a nice low price in it. We'll have a 6.1 upside. So with that being said, yeah, we're doing really well. I don't know if things are going to, we're going to have a big day or not tomorrow. Let's take a look at our pre-market. Again, pretty much dead flat, 0, 0, 0.3. These change later in the night, so we'll take a look at where things are going. But the overall theme is Biden is planning on just spending a lot of money he doesn't have, flooding the market with money. He's a Wall Street guy, which is good for people who own stocks. That's you and me. The old people are going to get their vaccine sooner than before because the governors finally woke up and realized how stupid they were being. And we have more vaccines coming. So overall, everything's portending really well. So if you don't have your portfolio where you want to have it, you need to get in. The big money has not yet been made. Trust me, the big money has not been made. In fact, if we look at where I'm expecting things to be, we're at 146 right now. I'm expecting this to go up to 300. So we're more than doubling what we're at right now. So if you don't have your stocks in, get them in. If you have any questions or recommendations, let me know. Any stocks you want me to touch on, let me know. And if it works and it makes sense, then I will cover them in the next video. So with that being said, we'll see you tomorrow and talk to you soon.
To get more information on the sales cheat code, go ahead and click on the subscribe button below. Also, down below in the video description, down there, there's a link that takes you to our website that gives you additional content, some additional freebies that we have, and gives you information on some programs that we have that have been proven to help people to make sales easy so that you can make the kind of money you want, live the lifestyle that you've always wanted, and not have to struggle in the process. And what might be the coolest thing of all is you don't have to put much effort into it. It truly is a cheat code that most people don't know about. And it's a cheat code that can change your life today. So click on the link below and let me help you start to experience these results starting right now.